So obviously a big downturn in February, but I'm looking at the year-to-date stuff. S&P still up 3% year-to-date. The NASDAQ up more than 9%. Why are you a reluctant bull? Because you obviously see upside. So what's the reluctancy all about?
It feels weird because the macroeconomic data is so poor and everybody's pounding the table on recession and the Fed and the sticky inflation. And so you have all these macro headwinds. But the technicals, and I feel like a little bit the fundamentals are there to support this. Right now, our uptrend line is intact. We've got a lot of good supports here. You know, we have wobbled here in February, but it hasn't broken down again. I do think investors need to be prepared to be nimble. Data is changing, and investors need to be able to update their thesis as new data comes in. But for now, reluctantly, yes, I feel like we're a buyer of these dips. I was such a bear last year. It's weird for me to talk about bullish. You were holding on to
this reluctant. I never know you to waffle. Normally, you're just like full speed ahead.
I know,
so
I know.
You're talking about economic data. We have a couple things that are definite market movers coming up. We have CPI in the middle of the month. We have a Fed meeting in the middle of the month, and a week later, the Fed minutes. Which one of those has the biggest impact?
I'm going to say Fed meeting. Obviously, then the Fed minutes come after, but those are so curated, and it's kind of the consensus. So I love to hear what Powell has to say. I doubt it's going to be much of a surprise. 25 basis points most likely. I mean, I know there's a little bit, 25% of a 50 basis points. I think that's a bit crazy for now. But what Powell has to say, because remember, last time he said the magic word of disinflation, the market got super excited. So we'll see what words come out over there. But it's so weird. We have to parse every sentence, every word, every way that they describe inflation in their path forward. But we all know there's a pause coming, be it June, probably June, not May.
Right.
But that is something the market's very excited for.
You know, February's been a kind of a sort of a throwback to late 2022, at least. We're seeing rates rise. We're seeing the dollar on the rise, the dollar up 2.5% this month. Are there any other similar trends we're seeing right now that we saw last year that put the markets under big pressure that you're watching?
I mean, yields coming up are the big thing. The retest of 4% for the 10-year was something, and it kind of moved in tandem. Dollar up, yields up, market down. But one of the things we saw that is different is the leadership last year really hasn't been leading. Growth versus value, you know, obviously it's been a tech story, and it's something we're talking about right now. We made a lot of money on the energy trade last year. Nothing wrong with these energy stocks, but look at like Oxy. They had a slight miss. They're announcing dividend increases,
right,
share buybacks. Nobody's excited anymore because they say, oh, your capex is going up, your preferred stock, you know, so it's hard to get excited about some of these value areas with staples expensive, healthcare lagging, bond proxies and utilities kind of struggling. So for us, it has become a little bit of a growth story, buying some. We still like quality. We aren't buying zombies. We're not chasing crazy risk. I don't want to do a Reddit trade, but we do want to have a little bit more growth, a little bit more tech.
I do want to ask you about that. You've been a big bull when it comes to energy. At least last year you were. We're still all waiting for that full China reopening. Aren't oil prices just going to spike when that happens?
But I don't think so. You do have supply increasing. You've seen generally increased capex. Almost every E&P has increased capex. You have the service companies talking about how much money they think they're going to make and how backlogged they are. So you have the ability to increase. You obviously have OPEC. And also the Russia crude really hasn't come off the table because it's going to India. It's going to China. They're way around these sanctions. I was reading an article the other day from Bloomberg about how they're swapping oil on tankers outside of Greece. You know, they're trying to find these ways around sanctions. I do think there's a solid floor around 70. We got to refill all the SPR. There is a demand increase in China, but I think you have a supply. You pretty much are in balance right now, so I don't see us having a spike there. Wild card, obviously, OPEC sometimes changes their mind, and that can certainly throw crude markets into disarray.
All right, we're into the second year of the Ukraine conflict. We're seeing some tensions between the U.S. and China. The VIX is really spiking. You didn't mention that as one of your economic reports because it's not. It's just a kind of a current metric. What do you think about all this, anxiousness in the market, and how does that impact the last month of this first quarter?
So I think when you look at it, we're worried about, does this conflagration grow? It's a tragic story the year on. You can't deny it's just utterly heartbreaking what's happening in Ukraine. The question is China getting involved? What's going to happen with Taiwan? You have all these geopolitical chess pieces that we're certainly watching. But for now, you know, I am a firm believer in status quo and that the world is not going to implode and blow up. So I kind of go with that as my baseline investment case. But you're certainly seeing tensions ratchet, and you're seeing that now get into companies. Apple kind of trying to shift away from China. Did not like how it was kind of stuck over there manufacturing-wise. I think you're going to see more and more shifts back to either onshoring or kind of countries we have on more stable footing. I think that is kind of the next trend, 5 to 10 years. Energy security, supply chain security. I think all of that was exposed in 2020 through 2022, and I do think that's going to impact prices.
All right, so we're laying out all the reasons why it's a pretty volatile market. It's a stock picker's market. You can't just buy the index right now. What are your picks right now? What would you invest in right now?
Well, there's two companies I really like. One is Cheniere. They had blowout energy numbers that look, they export LNG, liquefied natural gas. I understand nat gas prices are extremely low right now, but it is all about this play in Europe that they're going to have to get their gas from somewhere. And we didn't see the gas crisis we thought we'd see in Europe. Very mild winter so far, but we think Cheniere is the best operated company. They're continuing to bring on more and more terminals. That energy security is a huge play for us. They're a 5-10-year growth story. I think they're just ramping up. The other one we like is Zoetis. We think they're very underestimated right now. They have a patent that's pending in the U.S., not even in any of their 2023 numbers for a painkiller for cats, I believe.
Right.
And it's been very, very effective in Europe. So we get that on board. They had a lot of supply chain hassles last year, really underperformed. We think those headwinds are behind them, and we think they're being underestimated a little. So I wouldn't count either one of those two stocks out.
So that's very interesting. You pick something in like the pharma biotech space with Zoetis, but it's really focused on animals, farm animals, and also pets, as you mentioned. In general, where do you see the next either downtrend or uptrend when it comes to the market? You mentioned the Fed meeting, but is that a week after the Fed meeting? I mean, because there's still like a lot of people putting money into the market, especially retail traders, and a lot of people have confidence. We mentioned the NASDAQ's up about 9% year to date.
I think you're seeing some momentum play. Your breadth is a lot better. I think, one, we'll see what Powell says. He typically moves the market more than the rate decision, unless the rate decision's 50 basis points. But assuming the rate decision status quo, Powell speaking tends to move the markets. Recently, even if it's been a little bit more hawkish, the markets have liked what he has to say. They find some nugget in there. The pause is coming. We're going to have to wait on this data lag. Okay. So I think what I'd watch for the next leg down, one, really hot data still. That's going to remain higher for longer. And then two would be if we see these trend lines break. You know, this trend that we just established in October, we want to see that hold.